sell them.
Really?
Different animal there.
Hi again, everybody. Welcome back to the CommStock channel. I'm Marlin Bohling with you. Love having you on board with us, and we appreciate you joining us each and every day. I want to remind you to like these videos and subscribe to the videos by clicking on that bell icon down below, and we appreciate it too when you share these videos with others. That's what helps our audience to continue to grow. Well, today we have a threefer going on. I am joined by Justin McKinney and also by Relph. They're both with CommStock Investments. And we're going to talk about the way the grain markets are positioned right now, and if they're presenting some challenges, some opportunities, some things we should be looking at, either from the producer side or if you're on an end user side or what have you. And guys, it's great to have you on board. I know you have a wealth of experience and a wealth of knowledge about these markets here. Let's talk about some of the technical factors. Eric, I'll call on you, and I know you have pointed out a few things that were catching your attention when it comes to some of these grain markets here. And first of all, explain why things are catching your attention and what are you looking at?
Yeah, so recently a lot of the questions have been, well, how far can we rally? And have we put the lows in? Are we going to go make a new low? All of these questions arise. And so all we can do is go look at the charts and say, okay, these are some technical targets we can talk about. These are some ideas that we have, and then combine that with the other information we have available to us. But ultimately, it takes some kind of a fundamental trigger to make that happen, you know. So you've got to have a weather scare event to create any kind of rally. You've got to have a supply overload to create any kind of a bear market. These things all have to come from the fundamental side, but then the technicals can kind of give you targets. And so what do we look for on the technical side? Well, you know, you're looking at moving averages, you're looking at retracement levels, you're looking at all kinds of different stuff, and those things may change as the charts change and as the days go by. And a lot of the truists don't believe that technicals really should matter and that it comes down to supply and demand and that's all that should ever matter. But that's just not reality, and we all know that because the algorithms are triggered off of technical markers many times. And so these are the things that we have to consider. So first off, in the December corn, one thing that I notice is we trade this June 14th high down to the recent low at 403. We've come back to a 23.6% retracement. 3 days in a row, we've spiked above it, and not once have we closed above it. Today was no exception to that. We did close right at it. I mean, to the tick of that 23.6% retracement. So now, if we can break through there, get a good close tomorrow, that looks good on the weekly chart for sure. If we can close higher tomorrow, we're above that retracement level, and we've been up every day this week. That should open the door to the 38% retracement level. And you're probably going to find some psychological selling at the 4.25 in between those two numbers. So there's a lot of stuff piling up here just in the next dime or so that could hold us down, but we're still at value prices. And I think that's where, from an end user point of view, they have to be trying to procure bushels at these levels for both old and new crop. And that's why I wanted to kind of discuss that with Justin.
This is almost kind of a counter-seasonal type of year, though, to do that, isn't it, Justin?
Well, for sure, especially with USDA carryout numbers in the 1.8 billion bushels. So we get a lot of phone calls on what do I do with my old crop corn that I haven't marketed yet? You know, at the end of the day, those bushels are going to have to get carried to new crop. We can dispute plus or minus, 50 million, 100 million, but those bushels are going to have to get carried to the new crop. And who is going to carry those bushels? Certain areas, like where Eric's sitting at, the space crunch is not going to be there this fall due to the prevent plant and the flooding. Parts of west central Minnesota, again, the same thing. We've seen exceptionally high basis as those end users are trying to get their hands on the corn. And if you look at where the basis numbers are, and I'll use, west central Minnesota, normally a 30 under type of basis number, recently pushes up to 15. So when you look at carrying corn, you're 15 under the September, not a great bid. The recent rally in the market has helped some get that flat price up there, but 15 under the September, throw in the spread to the July, you're looking at corn at 45 under the July futures. Do you want to own that corn or do you want to sell that corn with the cost of carrying interest in there? It doesn't leave a lot of meat on the bone per se for your storage and interest costs. So Most of my clients, we've been getting corn moved, trying to hit those basis numbers before they go away, especially if they're going to need the storage coming into fall.
We've heard a lot of talk about, the funds are so heavily short, and yet the farmers were heavily long by hanging on to the grain. Has that changed much? Can you tell this week what's going on with open interest and that sort of thing?
It's hard to tell, but one that's something I actually mentioned to Matthew Cruz earlier today was the way that the trade has acted each day this week, other than Monday. It kind of leads you to believe that they have been getting some liquidating done. They're liquidating the shorts in the overnight and coming into the early morning hours, and then you're seeing farmer selling come in on top of that and pull us back off the highs by late morning, early afternoon, and then the session closes. So we're leaving what we call tails every day at the top of the day's range, where we're not able to hold the highs. We're seeing that farmer selling kind of take over late session, and so I think you're going to see that they have liquidated quite a bit, but then your open interest doesn't really change much because you're getting new hedging coming in.
Now, isn't it true that we're actually starting to get some new crop corn already, at least in the far southern plains area there in the deep south?
Yeah, I think in the Southwest and Deep South. Yeah.
Yeah. Justin, what's that doing to basis then?
Well, that's such a small portion of the export market. That's mostly going into feed markets, possibly some on the export market. But I have heard of some feedlots in Kansas backing basis off just a little bit, 30 to 40 cents, but from an astronomically high number. So, Eric, you're from down that direction. What are you hearing down there?
Yeah, it's been a lot of that. You've gone from feedlots paying $1.25, $1.35 over to now they're only paying $1.05 over, things of that nature. I think they're what happens is they push really hard right before the crop starts coming out of the ground to try to make sure, okay, we've got the next 60 days covered. Once they hit that need with that heavily pushed basis, which they did, then they start backing it off a little bit. They know that they're going to get it bought 30 days from now when it starts coming out of the ground in Oklahoma and the likes of that.
Well, Justin, I know you have a lot of experience with grain merchandising on like the Illinois River. I would imagine on the Mississippi River and that sort of thing. But what about where the crop just looks tremendous out there in the central Corn Belt? I know I heard Scott Irwin say the other day he's been doing this 30 years and he's never seen corn look that good before. Isn't that going to crash everything in that part of the country there?
Yeah, unfortunately, that is where I farm and where my corn gets marketed on the Mid-Miss. We have a good crop coming within 100 miles of the river, which is the draw territory, right? The question being is, will the rail logistics and the feedlots in the western part of the belt pay enough to justify moving that corn west? At these basis numbers, I doubt it, but we'll see what the combines run, what kind of yield we got to the west. We could see some pull to the west. We could also see some pull to the southeast too, down to that North Carolina region and those over Chicago markets. I could definitely see some bushels moving that way, as their crop isn't really that great down there.
Eric, is the soybean chart looking similar to the corn? I mean, does it look like it's trying to make a bottom, or is it a different kind of an animal right
It
now?
definitely looks like it's trying to make a bottom, I guess would be my short answer. But we'll pull up the November chart here and just take a peek, and that's going to be the most relevant contract. And
Okay.
and you can see yesterday, I mean, you were down for the day, but you've been up 3 out of 4 days this week. Monday was just a huge move higher. Today saw a nice follow through, and we had our highest close of the week today. That's got to make us feel pretty decent. However, I would caution that when we failed hard. We make a high up here at 86 and 3/4, yeah, 1086 and 3/4 2 days ago, and we close 12 cents off that high. So we push up to those levels, and then we find selling pressure, and that goes back to the idea that you're probably seeing late session hedging counteracting early session short liquidation. So while it's similar, we spent a week basing the market. That looks good. We saw a nice follow through to the top side. We're starting to see some other technical indicators here that make us think it could go higher. We're still a long ways from any prior congestive range when you're talking about 1160 to 1175. And then you've got the 100-day moving average currently sitting at 1156. Any of this is reasonably within reach in the case of the soybeans because they move so hard when they do decide to move. So yes, in a way similar, but we've got to we've got to get some sales going. That's one of the plaguing factors that's been killing us in the soybeans. And we are starting to see some sales to China, or we assume it's China. It's being announced as unknown destinations, but I think everybody feels pretty confident that that's who's buying it.
Yeah, it's starting to show up here in the last week or so. When it comes to marketing South American soybeans, I mean, it won't be too long, and they're going to be kind of sold out, aren't they?
I think they're basically there now. Yeah, yeah. I think their basis levels would indicate that what they're holding on to is Vegas bushels, or what we in the U.S. refer to as Vegas bushels. I guess maybe they're Rio bushels down there, but um, they're holding on tight to what they have left, and the basis levels would tell you that their FOB pricing is rising, and it makes you think maybe Conab's number might be a little more on the accurate side after all, but we won't know that for a while.
Well, Justin, as a long-term or long-time merchandiser, do you still watch like ocean freight rates and that sort of thing? Do you keep up with that?
Yeah, a little bit, not nearly what like I used to, but you look at you back to Eric's comment about selling bushels. We've seen that dollar real exchange work historically wide levels. You really question how many beans you're holding back at those exchange rates. I kind of have to believe that they're probably cleaning out the bins down there and what they're willing to sell for at this current time. You look at ocean freight values. We had some problems in the Panama Canal last year. I think you did an episode on that, or I saw that somewhere. Well documented about water levels. Obviously, if we can ship through the Panama Canal, it makes the center Gulf more attractive. And you have to also remember, you look at that lower Mississippi River Delta region. They need to get those beans combined before hurricane season, and they need to get them out. So that'll be the next thing. We're forecasted to have a significant amount of hurricanes this year. Don't, I'm not ruling out that we couldn't lose some beans just due to hurricanes. Who knows what will happen, but if that does come through, that is a big deal with the damage and what is left in the field.
I did hear one news item yesterday, I believe, that that lake that supplies the Panama Canal with all the water to lift all the ships and everything. I think they said they had received 2 feet of rain in the last 2 months there. So the lake is basically about back to where it should be right now, and they still have a rainy season to come yet. So from what I understand, it sounds like things are looking pretty good. So yeah, maybe we can crank up a few shipments going out of the Gulf Coast. New Orleans would be our main port terminal, right, for beans?
Yeah, for the most part, especially as fast as those southern guys can combine those beans. And they combine them and they put them on the water. It's just how they work down there. They don't store very good when it's 100 and some degrees, when high humidity. Combine them, put them on the water. Now, if we can get China to come in and take those beans, and we're competitive on those beans, you're setting yourself up for some pretty decent values in our traditional strong shipping season, October, November, December, January. If we have to get rid of those beans and discount those beans to get them gone, it doesn't set a very positive tone for the rest of the season. But if those beans are bought up and they're shipped out, you definitely change the tone of the market on the basis side.
Eric, I want to go back to you. You're a creature of the plains, kind of like I was. That means you probably had an interest in the wheat. We had the hard red wheat tour earlier this year. It indicated a pretty decent crop coming up, and it turned out to be better than expected. Now they have the spring wheat tour going on this week, and again, it looks better by far than what we had last year, and even the 5-year average. Is that just going to keep a lid on the overall wheat trade, do you think?
I think so. And it's funny, as you were saying, I have an interest in the wheat. I usually have an interest in selling it, and this just lines up perfectly with that. Um, they juice the market the week leading into the tour, and then the tour comes out and you're going to have by far a record crop here. And to me, the stage is set. That and the spring has been the leader. Now, the unfortunate part about this is without a little assistance from the wheat, I don't know if the corn can do much of anything. So then you get back to, you've got struggles over there, and are we going to go make another new low for the move, and are we going to test contract lows and all of these things? But I don't know this spring wheat tour. You're going to have people that know a whole lot more about it than I do, but the wheat overall, the production just can't be argued with, and bushels can heal a lot of market wounds.
Justin, I wanted to ask you about the livestock trade here, if you don't mind. Looking at the cattle market, they seem to still be flying high. How long can they keep this up?
Well, today we had a really good day on the August live cattle. Uh, Brings back to September contract highs that we had before the cattle on feed. Last year, we saw some cash trade a little bit better in the southern plains. Cash and futures have basically aligned within a couple bucks right now. Packer margins not very good. Boxes still struggling to move a heck of a lot higher. So we're getting another shot at hedging some of these cattle off at all-time highs or second best that we've ever seen, especially in the August contract. And the August and October contract is actually inverted, which Eric can speak to that more than I can, but very rarely have I ever seen the August contracted or contract over the October contract. So if you got cattle on the lot, you're looking at laying some risk off, probably not a bad idea to take a look at that in the next couple bucks here.
Eric, looking at this from a technician point of view, I talked with Joe Camp about this in our earlier episode, that live cattle are just almost breaking away to the upside, and here you have feeder cattle. They're just almost trending sideways here. It almost
Yeah.
seems like they're coiling up. What is
Coiling,
with that?
yeah. I mean, that's exactly what you're seeing. I mean, we can look at it briefly, and it doesn't take but a second. But yeah, with the live cattle, there was fear that we were going to see a downside breakout, and then just reverse course immediately, and then you saw tremendous strength in several of these contracts, and we did actually take out the top side in the October today. Although I don't know if we closed above that prior high. Yes, we did, barely. So yeah, this is the best we've seen in some of these deferred live cattle contracts, and you don't have to look very closely to see you've got a definitive uptrending channel here. And yes, you're going to trade within that. You've got some ups, you've got some downs, but a definitive uptrending channel, and you're right at the very top of it. Whereas in the case of the feeder cattle, and since I went to the first deferred month, I'm going to do the same in the feeder cattle. I mean, you had broad ranges back here, and then you're just coiling in here. And so at some point, you're going to probably see a breakout in the feeder cattle, but now you've narrowed the range down almost to last week's range, which is in the case of the September here, 254.60 up to 260.45. So you're only talking a $6 range. A feeder cattle can do that in a day. And so there's likely to be a breakout, just don't know which way. And right now, I would say the correlation between the feeder cattle and live cattle would favor a downside breakout for the feeders and possibly a consolidation in the live cattle. They're only going to give you so many shots at these high prices. And when you're talking about record high, don't expect those opportunities too often.
Justin, we had talked earlier in the year about how heavy these animals have been this year. Is that still going to pay to do that? I mean, what kind of break evens are we looking at on live cattle?
Well, it's obviously with corn setting back here to the $4 or plus or minus depending on where you're at in the country, it's definitely paying. And personally, as a cattle feeder myself, I look at another 100 pounds, another 30 days in the feedlot is an animal that I don't have to go out and buy right now. And those yearlings are just sky high in the barns and a little bit scary when you can't pencil them and hedge them up. So I think that trend continues into the summer or into the late half of the summer here. It just makes mathematical sense right now.
Well, and when you can put pounds on them, you can put it on at $1 a pound and sell it for $1.90. I mean, that just makes sense.
And not buy
All
a
right.
23, $400 or $500 yearling to replace it.
Yeah,
What about the hogs?
sell
Really?
Different animal there.
them.
Finally saw some positive action in the hogs. We've been waiting on that. Seems like, or it feels like, since December of 2022 when they got backed up. But I watch the kill numbers every day. We continue to kill more hogs than a year ago. Weights are up over last year. Positive is the cutout has made great strides. $1.06 today on the midday cutout. So cutout's finally moving. Even the hams are moving. Belly's got a little bit of work to historical levels. We're sitting in that $1.40 range right now in the belly. So possibly, we got a little bit of movement there, but with Eric's thought process, we just killing an awful lot of hogs out there right now, Marlin.
Is there a retracement target anywhere?
Oh, I mean, there's various target. You actually hit one of the targets yesterday and today, and that was this prior high here that we made back in June. But ultimately, I think there's a chance we could push the. I'm looking at the October contract right now. I believe you're seeing that. Yeah. Okay. So there's a chance we could push that 100-day moving average, which would be about another $4 to $5 on the market. But um, you're already getting to the point of overbought. You've got the RSI and stochastics at the highest level you've seen since back in April. There probably will be a reprieve. We started to see some sign of that, but prior to today's down day, you were up 9 out of 10 sessions, and that's just an awfully long run in a hog market that is still killing big numbers and doesn't seem to have a cash market that's following along. We did see some life out of the cash this week, but I don't know if we're going to see a lot of follow through on that front.
Fourth quarter hogs are just so tough to market, Marlin. You get close, $80 north on October keeps most people's money relatively whole. After the equity bleed that we've had the last year and a half, I do think you run into significant hedge pressure up at those levels too.
Okay, I want to ask you guys. I've been hearing from ag lenders around the country who are getting extremely anxious that if prices continue to erode on the ag commodities, that they're really worried about their balance sheets for their clients, the people they lend money to by this winter. Are you guys getting a lot of very nervous phone calls from ag lenders wanting some guidance on maybe helping their people do some marketing right now? Justin, you first.
Just my own lender calling me. Kidding, by the way, but if he isn't, he should be. um, no, you hear the grumblings of that, but for the most part, I think guys are relatively healthy going into this year. Maybe not 2022 type of cash in the pocket, but I just don't think that we run into that problem yet this year. Everybody's pretty worried about it. Interest is definitely hurting on those lines of credits, but uh, the hog guys probably a little bit more concerned than the row crop guys.
Eric, how about you? Are they eating away at that rainy day fund?
Well, I think you're seeing it. Yeah, it's definitely happening compared to the financial situation in the beginning of 23. We're in a very different boat right now, especially with interest rates like they are. So those that aren't well capitalized, that are having to borrow money to operate, they're facing a completely different dynamic than those that are cash flowing the thing. And so our office is right across the street from our local bank that does a lot of ag lending, and I talk to the bank manager over there pretty regularly, and his questions are always kind of similar. Well, how's everybody's attitude, and are we going to have the bushels to pull through this? And here it's even layered concern because of the flood. So we've got bare ground. We're not going to have an easy time making APH. And then you combine that with higher interest rates, higher input costs, and a lower market. It's just like a quadruple whammy. But the only thing that I can say that might help a lot of these folks is a lot of them grow a lot of corn. A lot of them take 85% RP on their federal crop insurance, and that's backstopped at APH levels. That's backstopped at 396 with that 85% coverage. Not true of the beans. Your beans are a little different animal when it comes to the crop insurance guarantees, but still prices where they're not going to lose the farm. They may just have to borrow a little more for another year.
And hopefully the next year turns out better, right?
Yeah.
The way it always works.
Always next year.
Yeah.
Yes, you're
Farmers
still
are the
like cattle
eternal
feeders.
optimist, you bet.
Next,
Well, guys, it's great to visit with you, and thanks for sharing your insights into what's going on in the markets here and where we currently stand. I appreciate that. That's Justin McKinney and also Eric Relph of CommStock Investments with us today on a special episode. And I appreciate you joining us. Thanks again for doing that. And for producer Brianne Hendrickson, I'm Marlin Bohling. We'll catch you next time right here on the CommStock channel. Thanks for joining us on our CommStock YouTube channel. Don't forget, you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.